Insurance rates jumped last year. Why? Natural disasters playing a major role. Is there any relief in sight for 2012? Spencer Houldin is the president of Ericson Insurance Advisors. Spencer, you say there is no safe port here, that we're all going to see big increases.
Absolutely. We've seen the industry lose money the last 5 years on that homeowners line of business. That follows 5 years of actually making money in a very soft market, but the market's hardened. We've seen the natural disasters and the frequency of events, and I think these are different times today than they were. The insurance companies in this line of business are not making money, and unfortunately, we're all going to have to pay for it.
Now, you say that premiums could go up as much as 25%. Is that what your customers are seeing right now in their bills?
We're seeing right now rates going anywhere from 10 to 25%, and it's not just one or two companies, it's all insurance companies, and it's happened relatively quickly. I would say in the last 4 or 5 months. I'm, of course, located in the Northeast. I was at a Trusted Choice Insurance Conference in Florida last week, talking to agents from around the country, and there was actually a group from Minnesota that did a presentation on the availability problems in that state. Texas, Georgia. Everywhere you go, there seems to be a problem with homeowners.
All right, listen up to this. Some people can't get coverage. That's the real news here, I think, too, that you're either paying more or you can't even get coverage. So frustrating for so many people out there. What are you telling your clients to do who are facing these huge increases?
Well, we're trying to educate them on just the dynamics of the industry and the financial aspect of it. But there has to be a point where the homeowner takes a little bit more insurance, self-insurance for themselves, higher deductible. Don't go.
That's an easy solution.
Absolutely.
You just up the deductible and you pay less, right?
Insurance in the simplest form is a transfer of risk from you to the insurance company, risk you don't want to take. Well, I'm not going to insure my pen because I can afford to replace it. Take a $1,000 or $2,500 deductible.
All right, that makes sense. You say, consider an independent agent. That's what you are, of course. And the beauty of that is that you guys offer multiple lines, right? You're not just representing Allstate. You're not just representing Geico. You're actually representing a bunch of different vendors. But what about just going online and using no agent whatsoever? I mean, isn't that an option, too, for some folks?
It really isn't, in my opinion, because it's a very complicated program. It's not just about price, Jerry. You have to realize that contracts differ from carrier to carrier, and you have to understand the nuances, because you could turn around and be a victim of an exclusion you didn't even know you had. You really need a professional. We're not buying loaves of bread here.
All right. You say bundle your coverage.
Home and auto insurance together gives you leverage in the marketplace, but more importantly, you can't find an insurer that really wants to be competitive on just a homeowner's policy. They want the auto. That's where they're making their money. How many ads on TV do you see that we want to quote your home insurance? None. It's all about the auto policy.
Right.
Put them together, save money, and have leverage.
You almost have to buy the two together now to get coverage, right?
That's true. We're finding a lot of companies now are coming to us, the agent force, and saying we do not want a standalone homeowner's policy. We want the auto, or we don't want any of it.
Do you have advice for people out there who are having trouble getting a policy? Where can they turn to? What can they do? You
really do need to speak to an advisor that knows the marketplace. If you've had multiple losses and the standard market, what we call the standard market, doesn't want to insure you, there are what we call excess and surplus line availabilities. It is going to be expensive and the contract might not be as broad, but you need to talk to an insurance advisor that understands that and can find the right solution, at least in a temporary, until you can be back up in the standard market.
If you have a mortgage on your house, you got to have homeowners insurance. No two ways about it.
Absolutely.
Spencer, thanks for coming in tonight. We really appreciate your time.
Thank you.
Okay, we'll be right back with my 2 cents more, and the answer to our question of the day is